What's going on YouTube? It's your boy D.Ford here. As you guys can see, I'm in a little different attire. I'm actually just leaving work. I wanted to bring something to the channel. I wanted to bring something a little different. As you guys know, I do work in the finance industry. So when it comes to number, when it comes to money, it goes hand in hand when it comes with me. So I wanted to bring that to the channel. And the way I'm planning on doing that is maybe once a month, depending on how this video and maybe the next video does. Maybe once a month, I would like to do a video, possibly the first Friday of every month, where I pick a topic, we pick a topic, and we kind of, I kind of discuss it and talk about it. Because, like I said, this is what I do on a day-to-day basis. I have people that paid me to work on their finances, whether it's, building credit, buying their dream home, paying down some debt, budgeting, whatever. That's what I do. So why not bring it to you guys? A lot of you guys want to know what I do. A lot of you guys want to know how can I afford, certain things, and not just me, but other YouTubers out there, other people that you guys follow and you subscribe to. I know you guys ask a lot of questions on what they do or how they are able to do it. So I want to kind of kick this discussion off, kick this series off with talking credit. So we're going to kind of talk a little bit about credit. Hopefully after this video, you guys will understand the importance of credit, understand how credit scores and your credit report works, and look into the good, the bad, and the ugly when it comes to credit. But without further ado, let's go ahead and get in the video. All right? All right, so when we look at credit, I'm sure a lot of you guys know what credit is. Credit allows us to purchase something that we may not be able to purchase with our money that we have in our account right then and there. And what I mean by that is you want to go buy a Dodge Charger Hellcat. Right now they're probably going for about $71,000 for a 2018 base model. You may not have $71,000 in your bank account, so how can you do that? Obviously you get an auto loan. What is an auto loan? That's a type of credit account. So look at credit accounts. It allows us to purchase something that we may not be able to purchase right now. So how do we know what we qualify for when it comes to our credit? Well, we're going to kind of talk about two things. We're going to talk about credit report, and we're going to talk about our credit score. Now, the way I explain credit report to my clients is credit report is like a report card. You go to school, you have your grades, and you get your report card, every semester, every quarter, whatever. Same thing goes with us when it comes to our credit. We have a credit report. So when we look at our credit report is accumulated of certain things, and it's done by our creditors. We have Equifax, we have Experian, we have TransUnion. They then accumulate what's on our credit report, our credit history, and they give us our grade. Our grade, we can look at it as our credit score. So our credit scores, depending on the creditor you go to, on average, they, well, not on average, they range from anywhere between a 300 credit score to 850 credit score. And I believe on average here in the US, we are between, the average American is between a 600 and a 750 credit score there. So we're decent. Later on in the video, we'll kind of go into detail about where the kind of credit score ranges go from. What's a good credit score? What's an excellent credit score? What credit score is maybe not so great, and how to build and establish your credit. All right, so when we look at the way our score is accumulated, we normally look at 10% is going to be, you're going to look at the types of credit, and then new credit. So the types of credit being whether it's a mortgage, whether it's a auto loan, whether it's a credit card, whether it's a personal loan, personal line of credit, and then your new credit. So if you bring in the new credit card, that can either increase your score or lower your score. Mortgage, again, increase your score or lower your score. It kind of varies there. Next, we look at something I stress to my clients is 15% of your score is accumulated by length of credit. So I know a lot of people don't like credit cards, and we'll save that video for a totally different day because we can get into credit cards and talk all day. And so what they do is they get into a credit card, they max the credit card out, they get a debt consolidation loan or whatnot, they pay that credit card off, and they immediately go ahead and close that credit card. Well, that right there is going to affect your length of credit history, and it can affect it negatively. I always say, without getting too much into it, if you pay the credit card off, keep it open, you know, just keep it open, cut it up if you want to. You don't have to use it. Going next, we talk about 30% is your current loan and credit, your credit debt that you have. So that right there affects your DTI, your debt to income ratio. So that's something that we look at with that, because your debt to income ratio, again, something that we can get into with another video, is going to look at how much debt you have coming out versus how much income you have coming in, because that can affect that. And then 35%, the remainder is going to come from your payment history. That is very important. Obviously, it's the biggest chunk out of the rest of the groups. So you really want to make sure that you're not missing any payments. I actually talked with the client today, and she wanted to do a loan, and we had talked about her payment history, and she was like, "Oh, I missed a payment once." And I was like, "Well, you know, how late were you?" And she's like, "Well, I was only a week late." Well, that's not a missed payment. That's just considered a late payment. You probably charged a late fee from your bank or the creditor that you were dealing with. So that's what you're dealing with there. A late payment is when it goes 30 days late, 60 days late, 90 days, 120, etc., etc. So that's when that is considered a late payment or a missed payment, and you can literally lose like 50 points by just missing a payment. So that shows you how important it is to make sure you're not missing any payments. All right, now getting into the good, the bad, and the ugly when it comes to credit. So in the beginning of the video, we talked about what credit can do for us, how it can help us, you know, purchase our dream home. It can help us get us into that fast car. It can help us pay down some debt. It can be a positive thing. So you have to use it. You have to use it right. Don't want to obviously put yourself in some type of debt that you can't pay, or maybe you think you can pay it now because you have some, you know, some additional income coming in, but that additional income is only going to be good for another year or two. So in 3 years, that loan or that auto loan or whatnot may not be beneficial for you. So you really want to kind of think about that. So don't think it's credit as a bad thing. So now when we talk about the bad part of credit, because there's all kinds of sides when it comes to credit, is putting yourself in a bind, setting yourself up for failure, maxing out your credit cards. That can be a bad thing. What creditors want you to do is they want you to go ahead and max that credit card out, come back to them, get another credit card, and move that first balance over, and then max that credit card out. They want that cycle to continue, and that's where it becomes ugly. So we have the good, the bad, now we go into the ugly. And really, without getting too much into it, because again, this is a totally different video and we talk about paying credit cards off and just credit cards in general. When you make an additional principal payment to a credit card, really it's no such thing, because if your credit card payment is $100 and your interest is 22%, well, 22% of that $100 is going to go towards interest. Well, let's say you go ahead and say, you know what, I'm going to pay $50 extra. I'm going to put $150 down. Well, with the loan, what happens is that extra 50 bucks will go towards principal. Well, with the credit card, that 50 bucks also gets hit with interest rates. So that's why you can maybe talk to your parents, you talk to some friends, and they say, man, don't get a credit card, or man, I've been paying this credit card forever, it doesn't seem like it's going anywhere. The reason why it doesn't seem like it's going anywhere is simple fact that they're paying extra, or they're paying the minimum balance, and they're getting hit with interest. So if you, now we can also use credit to build our credit score. A way to do that is, you know, let's say you're fresh out of high school, or you're just getting into college, or just graduating college, you never had any kind of credit on your credit report. I always look at saying, get a revolving credit account, which is a credit card or a line of credit, on your credit report. Don't recommend a line of credit, you know, for your first thing. Recommend a credit card. If you are a college student, you know, go to your bank, go to your financial institution, and see if they offer a college credit card or a entry-level credit card. Because what's going to happen is you're going to get that credit card, you're going to get it put on your credit score, and you're going to see your score jump up probably about 20 to 50 points. That's definitely going to help, because what happens is that money is pretty much the bank's money. The bank is saying, hey, we trust you with this $1,000, $2,000, $5,000, whatever the credit card is for. We trust you with that, which is our money, the bank's money, and we trust that you're going to make your payments on it. You're not going to miss any payments. You're going to pay it on time. So that shows the creditors, that shows Equifax, TransUnion, and etc. that, hey, Johnny is being trusted by bank XYZ. Let's go ahead and boost the score up a little bit. So that's something that you know, credit can do for you. So I hope you guys enjoyed the video. Like I said, I know it's something a little different than what you guys are used to. I know we talk a lot of cars on this channel. There's that boost of 6 right there for you guys. But I wanted to kind of share a little bit of what I do and kind of share that wealth of knowledge, because one thing we say in the Marine Corps, knowledge is power. You can never have so much knowledge. And I'm sure a lot of you guys ask, you know, whether it's me or whether it's a different a YouTuber, like, hey, how can you afford this, or this, that, and the third, or so even the questions, why do you spend so much money on a V6? You know, you don't know what's in my account. You can try to guess. Good luck to you. But if this is something that you guys enjoyed, make sure you give the video a thumbs up. Make sure you subscribe to the channel if you're not subscribed. Make sure you tell a friend to tell a friend. And if there's any topic you guys want me to talk about when it comes to finance, go ahead and post it in the comments, or go ahead and shoot me a DM on my Instagram. Until next time, we out.